Good afternoon, everyone. Thank you so much for making this session. I think what we're talking about today is how technology is reshaping risk and insurance. Obviously, a fascinating topic. I think when we look at how risk is being impacted by technology, I think fundamentally in how it's assessed, whether it's data, AI, geospatial technology. I think second in terms of how it's delivered, whether digitally or through embedded models. And thirdly, obviously the end goal of everything we're talking about, today, how we can use all these advances to drive inclusion. So I think it's a very, fascinating topic. Our time has been reduced, I was just told, from 40 to 30 minutes. So let's keep it quick and efficient. But I think before we get started, we've got a fantastic set of, panelists here. If I can just request everyone to introduce themselves, and then I think we can take it from there.
Sure. Hi everyone. My name is Surabhi Chhatre N, and I'm co-founder of Dygnify Ventures. We are a climate technology company, and we have a product on climate risk and resilience, which actually embeds climate resilience into day-to-day decision making for enterprises like BFSI, manufacturing, industrial, etc.
Good afternoon, everyone. Am I audible? Almost won't do because I think I can use this. Now it's good? Okay. So my name is Lalit Kharbanda. I think I am the only one in the panel who's not an entrepreneur. Everybody is a founder.
Very much not an entrepreneur here as well.
So I work for Agriculture Insurance Company of India as a general manager, and I am the chief marketing officer for the company. I come from a commercial background. I have worked with New India Assurance before this, stint for around 30 plus years. So it's interesting to have all of you here, and it's interesting to hear the perspective from the business people here. And we would like to take this forward. Thank you.
Thank you, sir. So I am Syed. I am the co-founder and the CEO for Dvara E-Registry. It is an agri fintech company based at Hyderabad, and we cater to the needs of small marginal farmers in the context of making them more climate resilient, and by providing them 360-degree climate smart services from credit to insurance to various other aspects, advisory, market linkages. So this is about us. Yeah, thank you.
Hi everyone, my name is Nitin Agrawal. I run a firm called Navadhan. We aim to create new wealth for ruralpreneurs. We do financing, link banks with the rural small businesses. We also have a practice in climate finance where we promote climate smart agri practices. I'll just stop there.
Fantastic. Thank you, everyone. So I thought how we would structure this is in, essentially three parts. I think maybe we can first talk about how technology is actually impacting risk. I think second, then maybe talk about inclusion, how we can leverage some of these technology gains, to drive access and inclusion. And third, maybe we look forward and, understand where this space is, going. So I think with that, Surabhi, maybe we can get, started with you. So I think you
You haven't introduced yourself.
My name is Abir Joshi. I am a principal with the BCG's financial services practice. Thank you. And thank you all, for being here. But Surabhi, I think you work very interestingly at the intersection of geospatial, climate risk. Maybe just starting generally, how do you see the impact of technology on risk in the recent few years, especially on, the agricultural and informal, sectors? How do you see that space having evolved?
Sure. I think it's a very good question. So we are going through some phases wherein the way we look at risk, the way we underwrite risk, the way we price risk is going through some transformational changes. And these transformational changes are driven by 2-3 things. Number one, embedding of AI and ML into everyday decision making, everyday analytics, etc. Number second, we also have a lot of geospatial intelligence available with us, which was not the case few years back. And there have been some marquee changes to our geospatial and space sector recently in India itself. So number one, we opened the space sector for entrepreneurs to build on top of that. Secondly, there have been some marquee results and some JVs which have been formed. For example, there is this NISAR mission, right, which stands for NASA and ISRO's joint venture, wherein better resolution geospatial data and better level geospatial data is available to us. If we look at insurance per se, because the topic is risk and insurance, it suffered from 3 fundamental problems right from the start. Number one, because we have to look at past and historical claims data while underwriting any kind of customer. Number two, we have to rely on physical inspection, which can be costly. And number three, there is risk pooling in terms of the way we are underwriting risk at a district level or a taluka level. So all the farms which are growing rice or paddy at the taluka level are priced similarly or are underwritten similarly, right? And which is not the case. So that is where this technology can come in very handy. Using geospatial technique today, and specifically NISAR, which holds a lot of promise. Currently, the NISAR data is not available, but by this month end, it will be available for entrepreneurs and for explorers to look at the advantages and the kind of products we can build on top of that. So number one, for example, if you're looking at a field and you want to understand really the depth of drought in a field and to the level of drought which is there, lack of soil moisture, lack of rainfall, you can understand that because it provides you millimeter level precision. Number two, it can look beyond clouds. So because it is synthetic aperture radar, often when we were looking at impact of flooding, for example, in a paddy field, or we are looking for a cold storage facility in Odisha, and to the extent of flooding it had got or what impact it had, we had to rely on a lot of other methods because remote sensing data did not really yield very effective results. But now with NISAR, specifically SAR, etc., we can look at and we can determine these things very easily. And the third and last thing is multimodal data processing. So we have satellite data available, remote sensing available, then we have IoT sensors available wherever possible. For very high resolution drone surveillance can be done. And fourth, we have AI and ML predictive modeling, which can predict yields, prices, production, even behavioral pattern using at historical data and some more socio-economic data. So all this makes us, rather than being a data sparse region, the self-employed and rural segment now becomes data rich, and beautiful and new kind of hyper-local products can be designed.
No, I think, thank you, Surabhi. I think that's actually quite fascinating. And Syed, maybe we can bring you in, to this point. Now that we are moving to a much more data-rich environment, I think usability of this data actually becomes quite critical. And I think you guys are doing some very interesting work in terms of making, farm, land, weather data much more usable for insurers and lenders. So maybe you can talk a little bit about that, right? So now that we're getting more data, how do we make it more accessible and usable by lenders and insurers?
See, India is an agriculture-dominated country, and we have 20 crores approx farmers. And out of this 20 crores, around 85% are small and marginal farmers. So by small and marginal farmers, we mean any farmer having a very small parcel of land. It will be less than 5 acres. And what happens, these farmers, because of their lower economy of scale, they are not able to, get the dividend when they are combined together. So what we do, we combine them, we aggregate them through the help of FPOs. We form and manage FPOs, we tie up with FPOs, and herein when they have a unity among them, so adoption becomes very easy. See, we talk a lot about increasing farm productivity, yield, and these farmers have the rich experience. Their forefather have doing this same farming, and side by side, lot of climate change is happening. And the climate change has not happened, say, in last 1 year or 2 years. It is happening for last 50 years, 100 years. Every year, inch by inch, the difference is coming. And now the difference has become substantial. So they understand the risk. And the problem is that reaching them, there are banks who want to do this priority sector lending for small and marginal farmers is a separate component in the PSL lending. But still, it is very tough to reach to all these farmers. And when they reach, the OPEX becomes very high. There are a lot of farmers who will not have any credit history, no CIBIL, no bureau score. So that gives another problem while underwriting, because these farmers definitely will not be having ITRs or balance sheets or GST returns. So on what basis will bank underwrite the risk? So their main risk is the farm productivity, the yield. So herein, we come and we don't average out a village or a block. What we do, we reach out to that particular parcel of land which is owned or even managed, because there can be farmers who are tenant farmers. There are farmers who don't have a proper land records, so they cannot provide you those documents. So we reach out physically to those parcel of land. We geofence, digitize that land, and we use satellite data to check how that farmland has yielded in last, say, 3 years. in the last 3 years means 6 seasons of Kharif and Rabi. And based on that, we deploy agronomy inputs and give them a score. Based on that score, a bank can take a call and underwrite what amount of loan is required. Similarly, for insurance, what is happening? We can give a generic average for a particular block or a particular village, the kind of crop he is growing. But if within even a village, it is not that all farmland are equally placed. Some has good are in good position to have a better access to water table. Some might not have within even a same block or village. So again, when we go there, we underwrite, we try to predict and ask the insurance company to take a call on that farmland so that proper underwriting can be done. And once there is some claim process is to be done, there also we chip in and we can provide the exact data how this farm has actually been by using our Khet score. We call this is our proprietary tool, and we keep on checking the progress of that farmland with some signature field. So by this point of time, this field should have germinated, or this should have been the strength of this field, this much should be the greenery. All this input we deploy, and then we can tell, yes, there is some problem with this farmland, and yes, claim should be done. So when we go to this, farmers, what they will do, see, my forefather has been doing this. We have not been using all this climate smart practice, and even if we convince them, they don't have money. So credit is a must. Without credit, they cannot survive. And then they will agree when you speak with them while we are doing collection that why they are unable to pay, why the NPAs and delinquency is so high in this village and especially agriculture sector. The reason is that vagaries of weather, every year there will be more rainfall, less rainfall, timely rainfall, untimely rainfall. So every year they are facing this problem. And what happens? They realize this, but there is nobody, to just go and tell them, if you do adopt this climate smart practice, this is how it will improve. So what we do, we combine this farmers together and try to build a kind of confidence with the help of FPOs, because FPOs basically are the aggregation of the local farmers, and the BODs are the farmers themselves. So this is how we build confidence and use technology, data, and entire agri ecosystem of that village to propel them, to encourage them to adopt these measures.
Yeah, no, I think, thank you, Syed. And I think that's also a very interesting point that you're raising out. No matter how data rich we get and how many innovative platforms we develop, at the end of the day, within a bank or an insurance company, you need to convince underwriters, in terms of the viability and the utility and the predictive power of certain things. In that context, Nitin, if I can ask you to put on a little bit of your rural credit, MSME hat, and if we get a little specific, with all this data that's coming in, what specific variables, behavioral indicators, risk patterns, are proving to be the most powerful? And how can we start feeding them into sort of like our underwriting models such that adoption of such, data points by national level insurers, actually increases?
Well, of course, very loaded topic, but I'll try to be conservative with the time. Either in lending or in risk protection or insurance, the proof of the pudding is if you have lent, the money has to come back.
Yeah.
Then only you can price it. In insurance, if you're charging a certain amount, your actuarial losses should be below that. It's extremely simple mathematical calculation. In all the things that we discussed so far, as a lender, I can tell you, none of it works. It's very, very simple. There are two reasons why on a loan somebody defaults, where one can do an underwriting. One is on the behavioral side. The other is wherever any kind of stochastic data is available. There, a more material data is the credit behavior of the farmer's household. And if they're running that business, how has been their trajectory on repayments? I can give you one example where the whole satellite business fails. Let's say if I am a soybean farmer and I have a standing crop. If an untimely rainfall situation, if my crop is standing in the field, there's a likelihood that I'll protect 50% of my output. But if I've harvested and the harvested crop is lying in the field, 0% redemption. But if I harvested early and kept it in my go down, then 100% redemption. So pura ka pura satellite ka story waste ho gaya. And it's a 0-1 game, right? So as a lender, it means nothing to me. What matters is this behavior and the social behavior of the customer. Are we able to build guardrails towards capturing social behavior is an issue. On insurance, problem is pricing. If I am the guy who's trying to pay for a risk protection, as a farmer, I need a 3-year loan for excess rainfall protection. But none of my insurance colleagues are able to offer it. They offer a 3-month loan. If I ask them to offer a bundled product of 3 years, the price will be so high that the maximum claim will be lower than the premium charged. So it's purely market economy. If your recovery rates are better, you can price them lower. Similarly, if the claim ratios in insurance are lower, you can charge lower premiums. That's where we are struggling.
No, thank you. And, if we can sort of bring you in also in this, Lalit, because from a very different side of the spectrum, as one of, India's largest, players in this, topic, doing it truly at a national scale. How do you respond a little bit to how, Nitin is saying? Are you, when we talk about the specifics, crop loss estimation, claims ratios, are you also starting to integrate data? Where are you on this journey?
Thank you. Before I respond to the question, a couple of very interesting observations have come in, and I will fully go with you, Nitin. Data works, satellite imagery works, all those fancy things work, but what ultimately works is the market beast. What ultimately works is the instinct, and the same applies to insurance. It's no different. Somebody said underwriting, and I could notice the emphasis on the word underwriting, as if underwriters are there not to be convinced. It's not so. Underwriters are sitting there to be convinced. But then data is not probably the only thing that will convince them. They will go by their instinct. They will go by, as he said, behavioral patterns. And they do have that is also a data. Yeah. When I have a certain perception about your behavioral pattern, it's a data. It may not be possibly dissected into bytes and all, but it is a data set on which I am relying as a businessman or as an underwriter. Talking of your question, how it has affected claims, claim assessment has become data assisted of late, last particularly 5-7 years. So it has become fast. It has become more accurate. It has started coming in, within the TAT which we expect. Yes, all of that has happened. Technology-wise, we are using remote sensing. We are using IoTs. Farmers are using IoTs. Small, in Telangana and Andhra, small farmers doing prawn culture. They are using IoTs, and we are able to integrate into their IoT devices and monitor how the risk is behaving over let's say a 90 days cycle. So claim assessment has become easier. Going forward, we would wish that this becomes more granular. She talked about granularity of the data, taking it to the field level, then possibly treating every field differently. From an insurance perspective, I would say that yes, it is very much possible to do it data-wise. It is very much possible to do it statistically. But when you go for individual pricing, whether that will be affordable, you already mentioned that even with this not so granular data, it's not, when we are doing area-wise pricing also, it's 90% of it is subsidized. That's how crop insurance in India is working. So when we talk of granularity, yes, that is the wish list. It should be more granular. We should be able to go to the field level assessment in future. But we have to be mindful that it has to be not only available, it has to be affordable also for the farmers to avail it. Now I'll rest here.
Sure. No, thank you. And I think quite interesting to see, if I can sort of describe it as both a healthy amount of skepticism, for the use of data in this space, but also, with the way you're talking about IoT devices and all, a lot of, innovation that's actually happening.
Sorry if I may interject.
Yeah.
We are not against data.
No, I don't think
So
anyone is against data here.
We do everything data backed.
Yeah.
Okay. So this gentleman sitting right in front, he's developed AI/ML models to do cash flow underwriting of agricultural households. So it's all data. Question is, what is the material data?
Yeah.
What is leading to the desired results, and what can cover your risk predictability? Knowing foliage from satellite data is not covering risk.
Yeah. No, I think broadly, in agreement. I think in the interest of time, maybe if I can, just segue somewhat abruptly into the second aspect of this, which was really, I think, the end goal of a lot of this is access and inclusion, right? So again, Surabhi, maybe if I can turn to you, I think specifically maybe with the idea of like climate risks, right? One of the greatest, causes of distress for most small landowners and farming communities, within India. How do we see, technology, I think, driving access to that kind of protection, particularly, in a way that can enable, the farmer to trust it, to understand it, and, can it be frictionless, such that they may not even know, like what's really happening in the background. If that's really the end goal, how do we try and make that happen?
Yeah. Sure. So I think the biggest problem or biggest anomaly in climate finance or climate insurance is the people who need it most, the people who are most vulnerable to it, they hardly get access to it, or it is very difficult to give it to them. And there are 2-3 reasons. And we have seen in India a very big credit story unfold, right? We have seen how we came up with India Stack, then we had account aggregator, then we had Okun, then we have now ULI. So many innovations have taken place. And that has made credit accessible to some extent. We are able to reach the masses. Similar story needs to happen insurance. To some extent, it is already happening, right? The first thing I think, and I'll talk about 2-3 friction points, how the product frictions that we are facing and which are the key frictions and what we can do about it, and some problems, maybe they will get solved over a period of time. Number one, how to reach the customer, distribution friction, right? It is very much a very important point, because if cost of distribution itself is very high, or if we are not able to discover the right candidate or the right insured for the insurance policy that we have, then the problem becomes very big, because your operating costs are going over the roof. The second is claims friction. Sir talked about it a little bit. Claims friction is very much a very important topic, because even I, as an insured, when I look at the insurance, claim is the product for me. It's not the policy which is the product for me. When I claim, and the experience that I have it, that demarcates one insurer from other. And we have seen a lot of shifting happen because of claims, right? And the third most important part then it becomes is that the trust, awareness and trust in the customer segment, because we are talking about the people who are difficult to reach, people who are self-employed, people who are not that much available everywhere else. So I think these are the 3 frictions. And very briefly, how we can attempt to solve these problems. I agree with people here that somewhere behavioral and somewhere the other aspects kick in, and your intuition also plays a big role along with data, but maybe somehow we can try to solve it. So we saw this entire embedded credit story unfold in India post-COVID specifically. We saw it unfold, and it reached to a certain extent, and it did have a good penetration. We have credit at e-commerce checkout, we have credit at value chain. Similarly in insurance also. So imagine that and we work a lot with MSMEs, we work in the MSME, we work with MSME lenders, we work with MSME financiers, self-employed segment. So imagine when a 3-wheeler, for example, an EV owner, or for example, let's take an agri example, a Vidarbha farmer selling cotton, and he goes to a mill to sell his cotton. There is a transaction taking place, right? The farmer is not thinking about risk and insurance and protection at that angle. The farmer is thinking about his today's business, his sales, and his survival. So at that point of time, if we have to embed an insurance product, it has to be really embedded in that value chain, wherein when he submits and he sells his cotton, immediately through technology, we get some amount of data sets on what kind of underwriting can be done, and some kind of premium amount comes that, you have this bigger farm, which he submits, and you have this kind of cotton. These were the prices of cotton in the last season. This is what the forecast says. This is what the yield is. This was what the rainfall last season. This is the forecast for rainfall. This is the drought level. This is the soil moisture level. So therefore, in all, whatever data available to you, along with your personal data, this is the premium. You pay 500 rupees along with the transaction taking place. So this in a way gets embedded, and the distribution problem to some extent gets solved, and it is already happening on the field. Right. Some people are already trying to do it. It is embedded to a large extent in credit transactions, wherein people are taking credit, a farmer is taking a crop loan, the transactions are embedding. The second part, claims friction, which is very important. And specifically from climate point of view, if we talk about, there are index-based products. Although we are seeing PMFBY also, SIR is there, and we have products out there, and we have some products for MSMEs as well. We have seen few good pilots, and we have seen few bigger pilots as well in Kerala. We saw something in Nagaland. We saw something in Seva recently. We saw a few micro institutions, finance institutions adopted for their customer. But index-based product, if basically backed by data and through 2-3 pilots, etc., if we live up to them, then to a large extent the claims problem gets solved, because the product is structured. If the rainfall for a cotton farmer less than 200 millimeter in JJS, with June, July, August, September season, your claim triggers in. Your heat wave more than 40 degrees centigrade temperature for 3 days, the product kicks in. So that gets solved. And for non-parametric indemnity based cover, we have obviously we have geospatial intelligence with some skepticism obviously, but along with computer vision, some problem can be solved. And last but not the least, the trust and the awareness, wherein we become partner to the customer in their journey, resilience journey. And suppose a farmer or an insurer or an insured is having some kind of climate related variability, which we know now 72 hours in advance, some advisory goes ki, hey, next 72 hours there is an upstream rainfall which has already happened, so your field or your warehouse might get flooded. Please ensure that your equipment and your harvest is already shifted at some level, and by the way, your rainfall coverage is intact. Then we become partners. So I think some small tidbits we can do.
No, thank you. And I think there's a whole lot in there that's very interesting, and I wish we could unpack it in greater detail. Sadly, we've only got a few minutes left. But Syed, I mean, I want to give you a version of this question again. Given that you work with FPOs and smallholders, quite extensively. I mean, just fundamentally, what makes people buy insurance, especially the kind of communities that we're talking about, and what are the kind of models that you see that are actually effective? I think is embedded one of them, or do we have larger challenges? Fundamentally around like digital literacy. I think there's a lot of other models that we've experimented with. Community-based selling, local entrepreneurs, etc., etc. But to your mind, like, what does it take, for that last mile purchase to actually happen?
So as I told you, when we are approaching these farmers, when we are speaking about all this climate resilient practice. So again, for the sake of repetition itself, these farmers doesn't have any other documentation.
Yeah.
So they don't have, all these ITRs and bank statements from where a bank can underwrite and provide them loans. So again, where those bank will go, they cannot afford. So we have to understand the commercial aspect also. The bank cannot reach out to these farmers, to this each and every farmland and assess how that farmland is. It becomes unviable. So herein the data comes in. And the data is not a particular 6 month or 1 year data. We are gauging future data as well as the past data. And we are predicting that this farmland will have this much of yield output based on multiple conditions. And of course, there are other aspects why some farmers will default or not default. But now since we have more than 5 years of data with us, and we have seen a strong correlation between the score which we are generating and the default which is happening. Now, why a farmer will purchase the insurance? So when we are going there and collecting the money, so what is the reason farmer will say not to pay? They will say this year because of high rainfall, yield has not happened, less yield, I have not got the price, I am waiting for the increase of price, or somebody important in his family has died, or he was ill, he was hospitalized. So they understand all these issues. So if we are able to, give an embedded product along with the credit, as ma'am told, so it, provide them a guidance. Initially, there will be reluctance, but once he gets the claim on time, he builds that confidence that yes, if you are paying the premium, you will get the claims on time, it will be settled. And for paying the premium becomes another deal breaker because they don't have the money. So again, if we are able to fund it, the bank is giving them loan, and we are making it a kind of compulsion to begin with. And once this success is seen by the other farmers, so we have done a lot of control study in different states, and where we did one village with no credit, no insurance, one village with credit and insurance, one village only credit, and we see the stark difference in the kind of output, the kind of confidence, the kind of women participation especially, and the kind of new to credit farmers coming into the picture. So we have those empirical data which is, which proves that yes, it helps. especially for those people who doesn't have any document to support for underwriting purpose.
Yeah. No, thank you. And Nitin, this is actually a problem you're trying to solve. You're trying to embed this, into the entire ecosystem. So maybe if we start looking ahead now at where we see this space going, where do you see us? How far out do you see us from a world where protection is actually inbuilt into every loan, into every invoice? I know you're trying to solve this, but how far out are we on this journey?
Well, not too far. I have personally, in my career, sold more than a crore policies which are embedded. More than a crore policies. To Surabhi's point, absolutely pertinent. First is reach. Therefore, you ride on somebody who doesn't have to take incremental OPEX. People like us. We have a distribution and we have a reach. We don't want to take incremental OPEX. We can cross-sell. So I am able to cross-sell life covers, health covers. We have tried very hard to sell weather, but there are actuarial issues around it.
Yeah.
So that's good news. Second was around embedding, which is what I clarified. Third was around trust. I already have an engaged customer with whom I have a deep involvement because I'm impacting his business. Hence, he can trust me. The only issue there is, one, it's a regulated market. So the level of innovation one can do is very, very limited. We have tried doing the pilots, like Surabhi mentioned, and we had to skip the insurers and go to the reinsurer.
Okay.
And along with the reinsurer, do a parametric insurance to settle the claims piece as well, the third friction that she mentioned. The trouble is only this. Farmer needs a 3-year protection. Insurer is ready to give only 1 year. If I bundle it to 3 years, the premium is higher than the highest possible claim. The math is not working. Markets has to work. Scale has to come, and it's a little bit of a chicken and egg situation. It will get solved through tech.
No, thank you. And Lalit, if I can turn to you maybe to start wrapping us up also. I think in the interest of time, I think maybe a slightly high level closing. I mean, where do you see this space evolving? I think we've had a lot of discussions and all, but again, I think from your vantage point, it's one of India's largest players in this sector. Where do you see us in 2030 in terms of risk insurance and technology?
You mean in terms of numbers?
Just in terms of how the technology will evolve and how the market will evolve.
Technology is evolving. Just to clarify before I answer, I know the time is up, but there's no skepticism about data at all.
Yeah.
What I meant was that it has to be built into the basic instinct for taking a decision, which probably comes from another data set residing here, which works.
Yes.
And which needs to be allowed to work for business to be done. Now, talking of technology, we are already using technology in a very, very big way. And going ahead, the technology is going to be the same. It's just that when you are using satellite imagery, it needs to be more, resolutions have to become finer. The granularity has to come from, let's say, right now we are doing cluster at a district level. It has to come down to maybe GP level, or ultimately to the farm level. The same kind of technology we need. We are talking a lot about crop. But crop is just 40% of the total agri-business. 60% business of the agriculture sector comes from non-crop sector. So we just have 1% of the livestock covered in this country. We have nearly 530 million cattle here, and what we cover is 25 lakh odd. It's abysmal. So that is where the technology should travel. And fisheries government is they have already announced a blue revolution. That is where technology needs to go. Technology is going to be more or less the same. Incremental steps are going to be there in the technology, but what is required is reach. What is required is reach in distribution. What is required is reach in claim settlement, because once you have that, Nitin talked of distribution, it's a pain point, yes, but once you have reached a critical mass in distribution, the pricing starts coming down. And I do not know, it's a wish list, it seems with you, so the topmost agenda is getting a 3-year policy. I would see how we can work on it post discussion. But yes, if you can really bring an actuary, understand what the business needs, I think that will be an ideal situation. That doesn't happen, and technology will be, yes, the ultimate leveler. Talking of 2030, yes, we will see a much more evolved technology, and hopefully we will be able to reach the granularity that you talked about. We will be able to design policies for individual farmer, and we will be able to settle claims based on the loss assessment on a particular field and not going by how a GP Gram Panchayat is behaving, or how a block is behaving, or how a district is behaving. I hope we'll be there.
No, thank you. And I think a very positive note to, I think, also end on. I think fascinating conversation, diverse viewpoints, but I think a couple of things. Data needs to get more granular. Reach, and access is obviously very, very important. The role of technology, I think, at this point is basically like it's table stakes, essentially, at this point. And I hope we can have this conversation maybe actually once again in 2030, once we do have a 3-year insurance policy, in place. But I think simultaneously, on a more serious note, where models such as yours can be scaled up to the level that they are, able to provide, I think, some of the communities that need protection the most, the protection that is adequate for them, I think, which is good for our, entire nation building agenda as well. So thank you, everyone. I don't know if we have time for questions, but if there are any questions,